The market's fear index has gone off the charts, yet coin prices won't drop. Capital is concentrating, and chips are being reshuffled. Iran is actually accepting cryptocurrency for straight transit fees. The AI narrative is shifting from how fast to how smart. Three major shifts in the global market are about to trigger an economic downturn. What's your take? Reconstructing value systems with digital assets, tracking 24-hour crypto trends, and elevating wealth through insight. Thursday, March 26th. This is BTV Chinese channel Coin Chain. I'm Michael. No matter how the world changes, you must stay clear on what's happening in crypto over the last 24 hours and what impacts your wallet most. The current market shows a very interesting state where sentiment and price clearly don't match up. The fear and greed index has dropped to 14, which is in the extreme fear zone, yet Bitcoin's price is still fluctuating around 70,000. This kind of divergence is actually quite rare in history. Simply put, as we discussed in the last livestream, the sentiment index is a lagging indicator. It reflects the psychological state of retail and short-term traders, not the actual price trend. But meanwhile, on-chain and market structures are also changing. Liquidity paths are quietly adjusting, with some large transactions moving over the counter, which has very little impact on public prices. Looking at valuation, the DTMM is currently around 1.74, still in a very low range historically. This usually corresponds to a market in an accumulation phase, rather than a peak. Looking at the overall structure, several different conditions coexist. Extreme fear in sentiment, yet prices won't drop due to support, and a continuous contraction in supply. These three coexisting features indicate that sentiment and fundamentals have begun to diverge. How the market moves next will depend more on changes in capital structure and liquidity, while sentiment indicators are just supplementary. The current market feels like one player is buying while everyone else just watches. In the last 30 days, Strategy alone bought 45,000 bitcoins, accounting for over half of the entire market's demand. Meanwhile, all other institutions combined only bought about 1,000. So compared to previous peaks, other institutions have lost 99% of their buying capacity, meaning the market is being held up by just one player. Strategy now accounts for 76% of institutional holdings. Let's look at the Coinbase Premium Index, which has been hovering around zero and often turns negative. This at least shows that spot demand in the US hasn't really kept up. To put it simply, the current structure is that buyers are too concentrated while the number of participants has decreased. It's fine in the short term with big players providing support, but if they slow down, the market could easily run out of buyers. So the overall market hasn't yet entered a healthy phase where multiple capital sources enter and buy together. What's the biggest fear now? Sudden drops and price spikes. Okay, looking at on-chain data, recent players seem to be operating in layers. On the surface, long-term holders are starting to move and sell, but not everyone is selling. It's mainly the mid-term players who have held for 6 to 24 months. Those in the 6 to 12 month and 12 to 24 month groups are the most active. They rebalance at the first sign of volatility, locking in profits and selling off. But veteran players who've held for over 2 years are barely moving. They're steady as a rock. Historically, this structure is very common. To put it simply, it's this middle group of people. They can't help but itch to swap positions and redistribute chips. Meanwhile, core long-term capital stays in the game, even buying the dips. This looks more like the market is reshuffling, re-establishing the chips and its bottom position. Big money hasn't retreated. Alright, like and hit the bell today. Let's see what's in the news that's closely tied to your wallet. This channel tracks all things big and small in Web3 daily. We hope these updates help you feel the shift in Web3's fundamentals. When entering a new investment track, this accumulated news awareness can support you in making rational investment decisions. Let's take a look. I've been traveling in Southeast Asia a lot lately. Gas prices are up in Singapore and Malaysia. Malaysia produces oil, but it's high-quality aerospace fuel. The low-end gas for cars is still imported. Gas prices are also rising in Thailand, and the US word is US gas is up $1 per liter, while in Thailand stations are closing because there's no gas left. So, as the world's most critical oil route, if the Strait of Hormuz becomes part of a toll or power play system, this simple geopolitical conflict will expand from the military to the economic sphere. And Web3 won't escape it either.
According to Bloomberg, Iran has begun charging transit fees for some merchant ships passing through the Strait of Hormuz up to $20 million per trip. Payment methods include US dollars, cryptocurrency, and barter. The strait handles about 20% of global oil transport. This fee collection is essentially the monetization of energy corridors. If integrated with stablecoins, it could impact shipping costs and the petrodollar settlement structure.
In light of that news, I have a message directly from the president, and I quote, "Based on the fact that there's a substantial chance of negotiations that may or may not take place with Iran in the near future, I will make my decision."
During the Hormuz tensions, Bitcoin dipped below $68,000 before rebounding to $71,000. Brent crude has risen over 60% this year, briefly hitting $119 per barrel. As expectations for US-Iran peace talks grew, oil prices fell below $100, showing how geopolitical risks are simultaneously impacting energy and crypto asset prices.
Geopolitical topics like this get a lot of buzz, but the focus and level of discussion are completely different in the Chinese and English-speaking worlds. I've been on a WeChat detox lately, trying not to check or open it for a week to see how my life changes. Back when we were in the news business, we'd selectively report what we could, but some of the stuff I see on WeChat now, it would not be an exaggeration at all to call it empty talk or even a complete fabrication. So, if you are truly seeking the truth, try stepping away from Chinese language news and opinions to see if your worldview or perspective changes. As for this geopolitical fluctuation, I believe the deeper change in the crypto world is to see if Bitcoin or on-chain payments will gain actual use cases in such war scenarios. To put it simply, what the market is looking at now isn't whether there's a fight, but who can rewrite the rules set by payment and energy risks. In the past, when people talked about AI, wasn't it mostly about who writes faster, who takes more jobs, and whose efficiency is higher, right? I'm telling you, things have changed. Recently, at an open cloud event hosted by Websy Labs in Chiang Mai, a completely different signal was released. People are no longer talking about whose AI is stronger. Besides being able to execute tasks on its own, the focus is more on how to participate in collaboration and how to let AI create more value itself. In other words, everyone is seeing AI as an autonomous economic entity.
According to information from Websy Labs on the X platform, the AI Coding Times OpenClaw event has concluded in Chiang Mai, Thailand. Participants included builders from OpenClaw, News Protocol, MetaEra, BTV, and Kimi. The consensus on-site was that AI is evolving from tools to agents and then to autonomous economic actors.
Actually, AI coding isn't just an efficiency tool, but a human rights tool. With AI coding, everyone can program using natural language, where words become reality. Our entire global civilization, human civilization, everything on the surface is a power system composed of the Internet of Things. So when everyone has programming capability, it means large-scale software deployment for various technological calls.
The real change behind this is the value anchor of AI. The tool era was about who was faster and cheaper. The agent era is about who can understand goals, break down tasks, mobilize resources, and execute reliably. For Web3, this change is particularly crucial because on-chain collaboration, asset management, content distribution, and strategy execution are naturally suited for agent systems to land first.
However, regarding this lobster trend, our Thai channel has nearly 10,000 followers. Thailand is doing okay, it's quite competitive, and people are willing to accept new things. But when I chat with friends in Silicon Valley about AI and cloud, they feel this is still quite far from the AI singularity in their minds. It seems only Asia is so competitive. What's your take on it? But I think there's a constant trend. Whoever can truly integrate AI into their actual business processes will reap the next wave of growth. The old logic is now obsolete and changing. As for the new logic, how will this AI logic take its place at the table? Everyone is feeling their way through because no one knows if AI's next step will be to replace humans or just knock them out directly. What do you think? Google advanced the quantum clock by 6 years, yet it was that same move that took down memory stocks. Are the underlying rules about to be rewritten? The stablecoin bill was collectively misinterpreted and frozen in a black box. Circle is really in a tight spot this time. I don't know if you're raising lobsters. Our channel's MyMy actually has a few issues. Its memory capacity is truly touching. Often, you'll tell it something, give it a token or an API, and it just forgets. You have to provide it again, and it keeps asking for permissions, right? That's the cost of its computing power and memory. Google recently said they'll use technical means to keep bringing that cost down, which I think is a good thing. Another thing is, if quantum computers arrive, people ask if Bitcoin private keys will be cracked. Don't worry about private keys yet. Worry about your 6-digit bank password first. So now Google has moved up the timeline for this quantum cryptography migration. These two things seem completely unrelated, right? But they reveal one thing: security risks under the old system will be breached sooner than expected. So, how to use AI to raise the technical threshold and rewrite the future security framework with computing power is what the big tech companies need to do now.
Google has set its post-quantum cryptography migration target for 2029, 6 years ahead of the US government's 2035 goal. It also disclosed progress on the 105-qubit Willow chip. Android 17 will introduce post-quantum digital signature protection that complies with NIST standards. Ethereum has launched the Post-Quantum Ethereum Resource Center.
I think to me, quantum feels like where AI was around 2015. So I would say in a 5-year time frame, you would have that moment where some really useful practical computation, is done in a quantum way far superior to classical computers, and that'll be that aha moment.
Google Research released TurboQuant, which can quantize LLM's KV cache to 3 bits, compressing memory usage by at least 6 times. In H100 tests, computing performance increased by about 8 times. After the news, Micron fell 6.1%, Samsung Electronics fell 3.6%, and SK Hynix fell 4.5%. But the market also cited Jevons paradox, suggesting that lower costs may not necessarily reduce overall demand.
So when watching the news, don't just look at the hype. Putting these two things together, you should know that the cost structure of future AI infrastructure will become cheaper and cheaper. Right now, our MyMy costs about $2,000 a month in token consumption alone, not counting the API price, because we use it in so many scenarios, right? At least MyMy has brought us a 100% win rate in our contract risk control. But coming back, in future price competition, it's no longer about model capability, but about who can lay out the underlying rules early. Whoever acts first and sets the security rules will hold the initiative in the future AI order. All right, even though it's a bear market, there's been a lot of discussion about Circle, the parent company of USDC lately. What's it about? The Clarity Act, this stablecoin bill. If it passes, how will Circle manage? Will it be knocked out directly by regulators? Another topic is the controversy over on-chain USDC freezing and unfreezing operations. People feel its transparency is insufficient. So the market's focus is no longer on scale or profit, but on where the rules and boundaries lie, and how future risk expectations can be controlled.
According to a report from Bernstein, this round of market sell-offs mistakenly applied the Clarity Act's restrictions on yield distribution directly to Circle. The bill mainly targets distribution platforms that provide rewards to USDC holders, such as Coinbase. As the issuer, Circle's core revenue comes from managing about $80 billion in reserve assets and investing in short-term US Treasuries to earn interest spreads rather than paying dividends directly to holders. Therefore, the actual impact is more concentrated on distribution channels.
The Clarity Act prohibits stablecoin issuers like Circle from paying interest. Okay, and in fact, every regulatory regime in the world for stablecoins, and we're subject to a lot of those.
On another note, ZachXBT revealed that Circle has unfrozen one address from 16 previously blacklisted wallets. This address is linked to GoDaddy.com and holds about 130,000 USDC. The core of the controversy is the lack of public explanation for the freezing and unfreezing process. These wallets are involved in an undisclosed US civil case, but the basis for freezing and the accountability mechanism have not been disclosed, affecting market trust in the predictability of USDC.
All right, it's foreseeable that after the Clarity Act passes, the direction and rules for stablecoins will be recalibrated. Major players will have their own operational logic, so we don't need to worry. There's a small news item, I'm not sure if you noticed, but it's quite unsettling, the way USDC freezing is handled. Think about it. In the future, if AIs need to communicate, trade, or perform high-frequency settlements with each other, once an AI realizes, hey, this thing can freeze me at will, do you think that AI would choose a stablecoin as its trading pair? That's a question I'll leave for everyone to discuss. All right, that was quick, right?
On-chain activity has surged to new highs, yet transaction fees remain sluggish, and coin prices haven't followed suit. It's as if the market is saying the people are here, but the money isn't fully on the table yet. After being hacked, Balancer simply shut down its for-profit entity to prepare for a lean winter. Established DeFi projects are now competing on more than just yield. They're also competing on who's more resilient. SBI and Sony are both injecting capital into Startail. And Japan is starting to seriously lay the groundwork for on-chain finance. It used to be about telling stories. Now it's like building while attracting investment. Recently, capital tastes have been a bit wild, with altcoin ETFs drawing in funds, while Bitcoin ETFs have seen some outflows. Bitcoin hasn't stalled, but the supporting cast is starting to steal the spotlight. Bitpanda has teamed up with Optimism to bring European financial institutions on-chain, and traditional players are starting to line up at the door of Web3. They used to wait and see for ages, but now it's like they're afraid of arriving too late to get a seat.
Alright, for BDB, we've been doing daily updates for 6 years now. When we first started, we had no capital backing and no support from big companies. So my takeaway is, if you're in the workplace, don't always feel that because you started late, have few resources, or no mentor, you can't outrun others. You know, as long as you're committed to this path and fight to the end, often it's not the most talented who win, but those who are still willing to keep going when no one is cheering. The person who executes and finishes a task will win. The grievances you've endured, the shortcomings you've fixed, and the pressure you've carried today may not immediately bring traffic or applause, but at some point, they will become the confidence for your comeback. Truly powerful people never break down. Instead, they pull themselves together after a breakdown and keep moving forward. You think you're just holding on, but you're actually upgrading yourself in secret. So, it's okay to be slow, just don't stop. It's okay if no one supports you. Standing firm on your own is the most remarkable growth. If you're in the same boat as us, please give us a like. That's all for this episode. Here are all our membership benefits. We hope you'll join us and grow together slowly. Let's get rich slowly. See you tomorrow.